Good afternoon. This is Oliver Slow. Blue Line Futures come to you from the Chicago Board of Trade with another episode of the 2-minute drill. We will probably go over 2 minutes by a little bit. We've got a few different markets that have caught our eye so far to start this week's trade. Today is Tuesday, April 23rd. Before we get into the markets, do want to remind you, if you have not signed up for a free trial of our daily commodity commentary, head over to bluelinefutures.com. You can sign up for a free trial there. It's grains, livestock, energies, metals, etc. We've got a whole team here at Blue Line Futures who puts out a lot of great daily and actionable commentary. And if you have questions over what you're reading, we've got a trade desk that is here ready, willing, and able to help you either just talk about the markets or even discuss strategy in depth around what you're looking at and your bias in the markets. So feel free to give us a shout. Now that I got that plug out of the way, we can start on the charts. Right here, we've got the July corn market pulled up, and this has been a little bit of a sleeper. We've got a 3-day rally, but it's been kind of one of those stealthy rallies. We're just kind of grinding higher, but I do think there's probably a little bit more upside here. 460, 457, that's going to be a big barrier. As you can see, this was a big inflection point going all the way back to January. It was support, breakdown point, resistance. Is going to be resistance here going into the back half of the week as well. If the bulls can chew through this, I wouldn't be surprised to see that stage a little bit more of a just because rally. And just because we get out above resistance, that could spark some additional short covering from funds and propel us towards these next upper levels above 470. Now, what's going to be the catalyst to really spur that? Well, the wheat market's been the big catalyst here this week to help the corn market get off the mat. A 50-cent rally-ish over the last 3 sessions, certainly constructive, and the first close above $6 since the middle of February. So that is going to be very important to keep intact. If wheat gives it back, that's probably going to be a little bit of a headwind for the corn market here in the near term. But if wheat continues to move to the upside, potentially that encourages short covering in the wheat market and then can spill into the corn market and kind of get that springtime rally going that everyone has been ready and waiting for. But again, we've mentioned this several times in the past. This is probably one of those years where you're going to kind of want to temper your expectations and redefine what a rally means to you, especially if you're a producer who needs to manage risk and manage the downside exposure. If you're a speculative trader, that is completely different. We do a lot of both. So if you have any questions over that, we can talk about your situation on an individual basis. Feel free to give the trade desk a shout. Now that we got those couple markets out of the way, two other ones that we're keeping a close eye on. This is June live cattle. We had a gap higher on Monday's trade, and that took us basically right to the 50% retracement level from the recent highs to the recent lows. That was about 178.40. We weren't able to really gain any momentum above there yesterday. That probably sparked a little bit of selling pressure in today's trade, and we already filled that gap. So it's going to be really interesting to see how the back half of the week goes. My concern is that we aren't able to get back out above here and we start to consolidate, which I don't think would be a bad thing. I think that'd probably be healthy for the market. We talked about it in our interview with RFD TV on Monday. I wouldn't be surprised to see consolidation between 175 and 180 in live cattle, presenting some pretty good opportunities on a shorter term basis for participants on both sides of the market. And the last chart that we're looking at outside of the agricultural space, crude oil has been under pressure here over the last week, but today was able to rally off of the recent lows after kind of defending the 20-day moving average here, as well as the recent lows. And that psychologically significant $80 level. As you can see here, this has kind of been an inflection point recently. So this was the breakout point, support, now support. We held that again. Will we revisit the highs back near 87? I think it's certainly in the cards. Obviously, a lot of things going on in the background geopolitically that could be a catalyst for that higher price action. So that is it. Yeah, we definitely went over 2 minutes, probably double that. So I apologize. But we covered a few different markets. Hopefully you gained something and got a kick out of what we're looking at. If you've got questions over any of that, feel free to give us a shout. My direct line, 312-837-3938. Remember, trading futures and options does involve substantial risk of loss, and trading is not suitable for all investors. Here's the QR code. You can snap a picture of that. That'll take you right to that free trial page. Again, any questions, give us a shout. Blue Line Futures is here and ready to help. Thank you.